Welcome back. You're still tuned into MF Corner. We have with us Mohit Gang. We are going to talk about the MF flows for the month of May. And Mohit, the big surprising number that we got was that equity flow number above that 34,000 crore mark. And that, of course, has a lot of one-offs, or I would say a lot of reasons why we saw that big number. So what did you make of that big equity inflow in the month of May? Do you think it could taper off going forward, since a lot of it was led by NFOs?
Yes. Sonal, I think primarily the reason is NFOs for the month of May. Honestly, I think out of the 34,000 odd crore number, some 10,000 plus crore have come alone from the NFOs. Though there weren't many NFOs in the month of May, it was a dry month from that respect that there were only 9 new offers and there was only one important one, which was the HDFC Manufacturing Fund. Honestly, the fund alone single-handedly has garnered almost 9,000 odd crore kind of, or 9,000 plus kind of crore kind of a corpus, which is a very, very substantial corpus. I think it was perhaps a dry period post 31st of March. There weren't many new NFOs which were coming in. It was the first of its kind coming in the peak of election cycle where markets were, or I think perhaps everyone was anticipating the government to come back and hence the push on manufacturing sector to continue. So which I think played a very big hand in the kind of flows which we have seen for the month of May. Other than that, also, if you see, I think the flows in multi-asset category and a few other categories have also been robust. But yeah, equity, I think it is SIP flows, which again has made a new record high. And the NFOs, these two, I think, put together have turned up very well for the industry.
Okay, and I think now investors cannot be sure of other things, but sure of SIPs touching new record highs every month. Every month there is a new number that we see, which is on the higher side. The other category which has seen a lot of interest is hybrid funds. They've done very well. Multi-asset allocation category has been gaining ground. Do you think the focus will be on these categories from here on from the fund side as well? Is this a category which the fund is focusing on and the investors as well?
Absolutely, Sonal. Look, I think there are two big components to this entire category. One is the arbitrage category, which in itself has done exceptionally well, has been gaining ground. And I think the way markets are stacked up, arbitrage category looks incrementally absolutely attractive for investors. Though I'm not very sure if the kind of fund flow continues to remain in the arbitrage category. Will there be any arbitrage left in the category altogether? That's a different question. But as of now, given the tax advantage which it has over debt funds, I think that category continues to receive a lot of funds in the overall hybrid category. The second part is the multi-asset category. I think this is one category where a year and a half back, there were hardly any funds available, but because of extreme market volatility, I would say, and plus market soaring and making new highs every day, I think there is a section of investors which are fairly wary. And for them, a combination of debt plus equity and debt plus equity plus arbitrage plus commodities plus some bit of REIT and some bit of REITs and InvITs, I think that overall concoction is working very well as a category also, because a lot of fund houses didn't have that on the shelf. They've been launching regularly new schemes on this particular category, and which has also led to industry awareness and investors flocking towards this category. Plus, it is still considered to be a safer category than a pure play equity. So my sense is the flows on the multi-asset side will continue to see an upswing. Plus, the returns also in the category has been fairly decent. So overall, the investor experience has been very good. And my sense is, I think this is one category which will really continue to do very well.
Okay. And what about large caps? This year was supposed to be the return of large caps, but we are still seeing those moves coming into mid caps and small caps. Do you think those are still investor favorite and large caps would continue to take a back seat?
Look, Sonal, I think quite a number of us are fairly surprised with that move, which continues to see in the mid and the small cap segment. Honestly, a lot of us, including myself, and I will not put myself out of that category, were anticipating large caps to be hugely outperforming this year. But if you break the large cap category, Sonal, let's say if I break the Nifty 100 into two components, which is Nifty 50 and Nifty Next 50, right, which is 51st to 100th company. Nifty 50 per se has been a slow mover. It's only about 4.8 to 5% up since last 6 months. But if you see Nifty Next 50, that's been the best performing across all the different market caps if you put together. Even if you compare small caps, mid caps, or any other component of the market capitalization, I think Nifty Next 50 has done terrifically well. So my sense is Nifty next 50 is where we have seen the maximum amount of movement. The pure play blue chips, the ultra large caps are yet to make substantial amount of move, which has not yet happened. My sense is you need a little bit more of fear factor in the market, or the fear gauge going a little higher for the ultra large caps to start moving the needle. Till then, till such time that market continues to be fearless and it's a risk on trade which is going on in the market, my sense is mid and small caps will also give you some amount of momentum going forward. But if you still ask me for this financial year, my money will be on the large cap side.
Okay, talking about what the performance has been like for mid caps, look at the moves today itself. It hit a record high. So I don't know what the markets are penciling in as well. Last question before I let you go, Mohit. We have around 2 minutes. So I wanted to understand, we spoke about the HDFC manufacturing fund that brought in around 9,500 crore rupees in the equity flows this time around itself. What's happening on the thematic side? 19,000 crore rupees has been the flow this time. It has been consistently increasing. And usually it's said thematic is for investors who've been in the market for a longer period of time, not so much for the new investors. What is leading to that big interest in thematic funds? And do you think funds or AMCs are more focused on this category?
Look, I think it's a combination of both sides, Sonal. I think investors are themselves becoming a lot aware in terms of where the market action is happening, right? So if you ask any investor, he would rattle out PSUs, he would rattle out railway stocks, he would rattle out defense stocks and say these are the sectors to look forward to. This has become like a household theme now, right? It is no longer a very hidden kind of a fact that what is doing well in the market, what is not doing well in the market. So there is an incremental investor demand towards these sectors. Last year also, when HDFC came out with the defense fund, we saw a huge amount of investor interest, and that fund continues to garner investor support and investor interest right now. Similarly, manufacturing, the Make in India theme has soared by leaps and bounds, and so is the investor interest in that. And even for fund houses, I think the formula is working very well, right? There is always a dearth of new ideas in the market, and anything which can catch investor fancy and garner huge amount of AUMs, I think fund houses are more than happy to launch such themes. So for them, I think it's a blessing in disguise that by launching these funds where there is no restriction on in terms of having multiple unique ideas on the shelf, they can come out with different ideas, different themes, and if someone really catches investors fancy, then I think amount there's no dearth of amount which can be mobilized across. So my sense is you will continue to see this fancy towards the sectoral theme per se.
And now that we have that continuity in terms of the cabinet ministers as well, right? There is a hope that that policy continuity and the capex continuity would continue as well in different sectors. Mohit, always a pleasure speaking with you. Thank you so much for joining us today and explaining to us all about debt funds and explaining the moves in the month of May as far as flows are concerned. With that, we'll take your leave on this edition of MF Corner today, but stay tuned for Closing Bell to take you through the last hour of trade.